Yo, I'm Brendan, and today I want to share with you the new IRS revealed 2025 tax brackets and marginal tax rates that you need to know so that you can know how much money you're going to pay in taxes. Thankfully, for everybody who didn't get a massive raise in this last year, we're going to end up paying less money in taxes. Here are the changes that you need to know. First and foremost, the standard deduction, which is awesome for anybody who's currently paying taxes because you're a W-2 employee. If you're self-employed, or even if you're retired, the standard deduction is our biggest and first friend, and they've bumped it up for 2025. So if you're Fingal. So if you're single or you're married filing separately, the 2025 standard deduction is 15 grand. That's up $400 from last year. If you're married filing jointly, for the rest of this video, we call it MFJ, then it's up to 30 grand even for 2025. That's up $800 from last year. And if you file as a head of household, it's $22,500. That's up $600 from last year. If you're not familiar, the standard deduction is the first amount of income that you're allowed to take off the books, if you will. So let's say you make $100,000 and you're married filing jointly, you just forget about 30,000 of it. The government says this is the amount you can deduct from your taxable income, hence deduction. So in my opinion, the fact that these have gone up is a good thing because inflation has gone up. Some people's wages have gone up, but for a lot of us it hasn't. And so if anything, this should mean that we pay less in taxes in 2025 if our income remains constant. Now for the really exciting part, marginal tax brackets. If you're not familiar with exactly how marginal tax brackets work, then watch the video that I link at the end of this one. But the important thing for you to know is if your income crests over one of these boundaries, and wherever you fall in this, if you're a single person and next year you start making $104,000, it doesn't mean all of your income gets hit at a 24% rate. That is not what this chart is telling us. It's confusing. I get it. So when this video is done in about 2 minutes, you can go watch that one and make sure that you understand how the marginal tax bracket system works. I've got a couple of analogies in there, buckets and elevators and things that make it really clear. Or send that to your friend or your spouse or somebody who doesn't understand marginal tax brackets. First off, let's talk about people who file as a single. The first two rates, the 10% and 12% bunches, have both gone up by $325. So that's not bad. But the next bracket up has been raised a significant amount more. So that income that's over $48,475, that limit has been boosted by $1,300 compared to 2024. The next bracket up has been boosted by $2,800. And by the time we get into the serious money, a single person making almost 200 grand is a lot. This amount has been raised by $5,350 since last year. They're allowing us to make more income and only be taxed at the same rate. That's essentially what this change is doing. Then once you crest the $250,000 mark, your limit has been upped by $6,800 a year, and the very top tax bracket. So anybody who's making millions of bucks is very aware of the 37% marginal tax bracket. That limit has gone up by $17,000 compared to last year. Now, for those of us who are married filing jointly, it's sort of a similar proportional change, but the numbers are a lot bigger because we're talking about two people kind of filing together. But it's not the same as just doubling everything. Like just because this first group here is doubling, it doesn't mean the rest of it is. The first two brackets went up by $650, the next one went up by $2,600, $5,600, $10,000 respectively, and this $500,000 bracket was increased by 13 grand, which is really cool, but that top bracket was only increased by 20 grand. So as you can see when you first clicked on this video, my take on this is that it's overall a good thing. This should make us be able to retain more of the income that we're making because those limits are higher. The amount of money you can make before you get hit with that next section of money that's taxed at that higher rate is higher than it was before. If your raises were perfectly matched with inflation and you got, a 6% or 8% raise or whatever it is last year, maybe this doesn't really change anything for you and tax time will feel exactly the same. But if in 2025 you're expecting to make less money than you did in 2024 or even the same amount, this is great news for you. All right, enough little numbers on charts. Now you got to watch this marginal tax bracket video so you know how tax brackets work and you can explain it to your friends. Thanks. See you guys later. Bye.